Many consumers are trying their hands at crypto trading for the first time. Brands can play an essential role in easing intenders' transition into the crypto space by being trusted partners, educators, and safety nets. Discovering the next crypto to moon can be a daunting task without the right tools. Morales Money's Token Explorer can help you uncover hidden gems and make smarter choices. 2. It's a community-driven asset. A cryptocurrency's community, developer activity, and partnerships are critical indicators of its success and long-term viability. Cryptos with strong communities and a solid development pipeline often perform well, especially during bull markets. Place-based assets, such as communal spaces like housing development board void decks and social bonding spots, play a crucial role in community building. However, the COVID-19 safe distancing measures that have been introduced could mean that many of these physical spaces will be shut down. This is where cryptocurrencies with powerful community building capabilities and unique use cases could thrive. Examples include 888, meme coin Trailblazer Dogecoin, and Layer 1 Veteran VeChain. These assets are all rooted in the community and offer unique ways for people to connect and share their ideas. They are also likely to remain relevant in the future. As such, they may be the next cryptos to boom. 3. It's a meme-inspired token. While cryptocurrency may be a speculative asset, many tokens also playfully mimic and parody popular culture or events. These tokens are known as meme coins, and their market performance is often driven by social media trends or community engagement. Meme coins typically have no underlying utility, but they can be fun and engaging to own. Some, like Dogecoin, Doge, have become major assets thanks to their popularity and community support. Others, such as GeoBoden, Boden, and Wiener AI, YE, have been fueled by their own unique storylines or mascots. However, a coin's value is ultimately only as high as its demand, so it's important to research any meme coin before investing. It's also important to note that meme coins can be subject to pump and dump schemes and other forms of fraud. This can lead to significant losses for traders. 4. It's a sustainable ecosystem. An ecosystem is a network of habitats that supports life by regulating natural processes, supporting biodiversity, and providing essential services. It also protects against natural disasters like floods and landslides, by absorbing excess rainfall and stabilizing soil. Sustainable ecosystems are self-sustaining and exhibit high resilience against disturbance. They're also characterized by the interdependence of species, which makes them adaptable and responsive to changing conditions. Ecological sustainability is a growing focus for organizations, as shown by companies like Interface, Patagonia, and more. By reducing their carbon footprints, conserving water resources, and participating in conservation projects, these businesses show how it's possible to balance environmental health with business growth. The result is a more resilient and sustainable world for all of us to enjoy. 5. It's a cheap token. Cryptocurrencies are all the rage now, and they're front and center on financial networks. That's because the speculative assets can be quite lucrative, especially for those who can buy in early. Many new tokens launch with a relatively small amount of their total supply in circulation, and this gives the impression that they're cheap to begin with. However, this isn't necessarily true, as a fully diluted market cap takes into account all of the tokens that have yet to be released. One example is Earth Meta, which has experts and cryptocurrency whales buzzing because it's currently under $1 and offers a great risk-to-reward ratio. The project's focus on decentralization and eco-friendly blockchain operations also make it a potential winner. It's the kind of thing that could change people's lives. Just be sure to research any new investment thoroughly before taking the plunge. 7. It's a DeFi project. Decentralized finance, DeFi, is a blockchain-based financial ecosystem that offers participants the ability to access savings, lending, investment and trading functions in a peer-to-peer manner. It also enables them to leverage crypto assets for purposes such as yield farming. Most importantly, DeFi allows users to make and receive transactions without the need for a central authority or middlemen. This means that money can move in near real time and is accessible to anyone with an internet connection. As a result, DeFi is able to offer higher levels of security and transparency than traditional finance. However, the space is not without its risks. For example, smart contract vulnerabilities and crypto scams like rug pulls can result in the loss of funds. Furthermore, the complexity of DeFi protocols can make it difficult for newcomers to understand and navigate. Consequently, it is important to do your research before investing in any DeFi project. 8. It's a staking token. Staking is a key part of how certain cryptocurrencies verify transactions and earn rewards. It's a more efficient and eco-friendly alternative to Bitcoin mining, and it can help a blockchain stay secure while reducing fees. The staking model also incentivizes participation by rewarding stakers, which could lead to the growth of new and existing blockchains. Staking rewards can be quite high, but it's a complicated process to get involved in and can raise many questions around security and liquidity. Another challenge is that staking often involves a lockup period, so you can't access your tokens for a set amount of time, which can be problematic if prices shift or something unforeseen happens. This is why it's important to keep custody of your own crypto, rather than letting a centralized app or exchange hold on to your tokens. 9. It's a community-driven asset. A community's assets are the social relationships, networks and trust that are its underlying foundation. Identifying these assets requires a commitment to a participatory process that includes members from a range of groups and sectors in the community. It also involves understanding that place-based assets like void decks and shared community spaces may not always remain accessible. The COVID-19 safe distancing measures have been a wake-up call for many communities who took these bonding spaces for granted.